Okay, hi everyone. Can hear me? Yes, and can see the screen as well. Yes, no, yeah. Okay, sorry for the small delay. Didn't have lunch, so went to it. Okay, I'll wait for like 3 minutes until the others also come. Right. So if you have any friends on the group and they are kind of missing, you can just let them know. Okay. So today we have to start from here, 2016. We'll go all the way to 2020 and kind of finish it. So I will not drag today's class, guys, because most of these things that we have been discussing over the days, right? Over the days, we have been kind of discussing it. So I'm not really going to, you know, drag it, go into the very basics. So maybe if we can, we'll try and finish class by maybe around 3:30. So like 1.5 hours, right? Give me your full attention. We'll finish this off, right? So with today, the unit number 5, national income accounting, will be over. Okay, so how many of you all did the questions, national income accounting 2016 to 2020? Yes, no, did, done. Nice. So all those who did, I think it would have been, I don't think it is that hard right now compared to, I don't think it will be like very easy where you can score all 20. But compared to what you were thinking of national income accounting, right? I don't think it is that hard. After you do the questions, you realize, even this is something that is definitely possible, right? From maybe a 20, now, if you go into the papers of 2019 and onwards, you will not have a full question, right? So question number 4 will be from national income accounting and macroeconomic equilibrium. So it's not going to be a full question from national income accounting. So also when you look at it, it's not that hard, right? So again, now the advantage of having one question from 2 units is they will only test you the basic, then they will not go in depth. Now if you look at the questions in the 2020 paper, actually 2020 2019, look at question number 5, right? It's from national income accounting and macroeconomic equilibrium. And also if you realize, right, all those subparts in those questions are tested from the basics, right? They don't go very much in depth and test you a small part that you have not kind of studied. Why? Because now there are 2 units, there is so much of questions they can ask because they only have to make one question. So that is what I'm telling you all. If you all are really up to it, go prepared for even these 2 units, right? The more prepared you go, right, the better you get at scoring in your exams. Okay, so the revision class students, I'll catch you all tonight during the MCQ discussion of the mock exam. So the others also, guys, now even right now MCQs, you have no choice now, you have to do everything. Okay, so doing the essay questions kind of sometimes helps you to do the MCQs also, because now these same essay questions, they can convert it into MCQs, right? So as long as you have your basic understanding right, I'm guessing that you can do really well. Okay, so don't give up on any units. I think it's a bit too early to give up on any units. So go plan for everything, right? Study properly and go, right? I'm pretty sure that you can, definitely get that A. Okay. Right. So hoping everyone who is supposed to be here is there, guys. I got a small request from, I think there's a lot of students. The issue is this time is clashing with another class, right? That is why many of students are kind of missing. But I don't know if that is the actual reason. But maybe from April, I'm not yet confirmed. I'm not even thought about it. Maybe from April, I might change the time of this class a little here and there. I'm also not sure of which time I should change it to, right? So there is a possibility maybe from April, the time might change because I heard that there are some other same econ classes happening at this time. Not very sure about the exact how many are going and all of it, but I heard something. Okay, right. So we'll go faster since this is the last thing and since I've been talking about this unit over and over again, right? We'll try and finish by around 3:30. Okay, done. 2016 question 5 answer number 1, right? Okay, question 5 subpart 1. what is value added and how it is calculated. Now I'll tell you all this, right? Now for a question like this, you all know what is value added, right? You all know how to calculate value added also. But the thing is, you might not know how to put it as an answer, how to write for a 4-mark question. That is where you will be struggling. Now you know the basic understanding of what value added is. Remember, value added is simply what does each producer or each let's say firm add in new, right? So let's say someone buys inputs for 100 and they sell their output for 150. That means they have added 50 worth of value, right? That is value added. So everyone knows what value added is. You all know how that thing is. So ideally, now remember, right, when you get a question like this, when you're answering, you need to break it down. Remember, can you see there are two sub questions inside this? What is value added, how it is calculated? So for what is value added, you will kind of get 2 marks, right? So you give your basic definition, right? Whatever that might be there on your tudes or anything, right? That is simply like a memorizing thing that you have to do. But the more questions like this you answer, then you will have one set of answer to go and write. Okay. So what is value added? You can, talk about value added is, let's say, the value a producer adds, right? Or you can say value added is simply the value of the total output of a producer minus his intermediate consumption, or minus all the inputs that he consumes. So that is value added. And then you can say value added, you can say, is the own contribution of a firm. That is what, now I'm hoping you all know the meaning of value added, right? So you can say it's the own contribution. I'll just give you all some key points that you can talk about, right? So I'm not giving you, there is no one right answer, guys. You can structure it anyway, but I'll just give you the key points that has to be there. So you can say value added, right, is the, let's say, total output of the firm minus the intermediate input that you have to say, right? Intermediate input, you need to say that. Also you can talk about things like value added, right, is the firm's own contribution, right? That is the what he has personally done. So it's a firm's own contribution, right? You say that. Okay. Then apart from that, you can talk about, you can say, this method has come in, right? Maybe this method has come in to avoid the error of double calculation. Remember the double counting error, right? As a solution for that double counting error, we had this thing called a value added method, right? So you can say this is presented, right? Presented as a solution to the double counting error. And what does this do? It avoids, right, any double counting. So because it's a solution for the double counting thing, it avoids any double counting that happens, right? I'm hoping by now you all know what is this double counting error. So that is kind of enough for, what is value added. You don't have to brag too much. And then can you see the second part there? How is it calculated? Now for how is it calculated, it's very hard for you to show, right? So what you can do is, in a situation like that, now when you don't know how do I write a theory part on how it is calculated, I know it is this minus this. So what you can do is you can give in an example. You can explain it using an example, because as long as the examiner knows, now here they have not said no, show using an example how it's calculated, no. But in order to show it's how it's calculated, it's very hard to explain using words. Even I might struggle sometimes, might not be able to give the proper words. So what you can do is you take an example, guys, right? So you can, take about, remember when I explained, I think I used something called, I also talked about some t-shirts, right? So you talk about, let's say firm A, right? I'll just say firm A. You say firm B, right? Firm C, right? So you can simply say, the value of their output is this much, right? I'll just give you like a basic table. You can say their output is this much. Intermediate consumption, I'll say IC, therefore value added. So you can just give some basic numbers. You can say firm A, they have an output of, let's say, 1,000. Their intermediate consumption is 0. So their value added is 1,000. So let's say this thing is sold to firm B. So firm B, let's say, has an output of 2,000. They buy that from firm A, let's say 1,000 of intermediate consumption. So value added is 1,005. Let's say firm C, They have 5,000 worth of output. The intermediate consumption is 1,005, right? So you can say their value added is 3,500. So something like this, a basic, maybe a table, or it doesn't have to be a table always, but something that the examiner understands that you know what it is will be more than enough. So you can put a line down there and you can say, okay, the total value added is therefore 5,000, right? So value added is 5,000. So that's all, guys. Understood that? Yeah. So be smart enough to break a question. Then you answer. And if you can't put in theoretical knowledge, you put in some numbers, put in some example, and then answer. Are we okay with question number 1? Yes. Okay. Right. So then we'll go into this, right? Then we'll go into this, part number 2, that is, what are the major components of aggregate income? Guys, now here when they're asking about aggregate income, now this answer can differ, right? So when you write this, I think a better answer would be, if you write, now aggregate, now what does aggregate mean? Aggregate means total, right? So they're asking, what are the components of total income? So I prefer, right, if you write something on the income approach. Can you all tell me, under the income approach, how do you calculate the GDP, that is the total income? How do we get what and what do we add? So if you write those components, you will get your 4 marks, rather than directly asking what are the components of the in the income approach, right? They ask you nothing. Income approach, CIGNX is expenditure approach. Income, exactly. We can say compensation of employees, right? Compensation of employees. Then you can say, let's say, gross operating surplus, or we'll just say operating surplus, right? We'll say operating surplus. Then we'll say mixed income, operating surplus. We can say mixed income, right? And then we'll also say, what is the last one? There is something to do with taxes. You can say other taxes less sub. So something like that, right? Or net other taxes, anything is fine, guys, right? So if you give in something like this, you will get your full marks. Remember, they are simply asking you what are the major components. You don't have to explain, right? Be smart, okay? So if they are asking you what, you can mainly, you just state that is enough. You don't have to go into detail and explain for pages and pages, not really needed, right? So difference between other taxes, guys, other taxes are like taxes on production. For example, let's say tax on your building, let's say tax on let's say the land, taxes on pollution, right? Those are the other taxes. Same thing with other subsidies. Now, net taxes means, right, when you talk about net taxes on goods and services, those are the taxes and subsidies the government gives on the goods, the good itself. The other taxes are usually during production, right? Let's say to get some license, let's say, to produce this, you need to pay a tax, that kind of things. Okay. Just check whatever tube that you are studying. So when yeah, you can put taxes on production and imports, no problem. Right? So, okay, just normal things. Now, when you, in the income approach, when you add all 4 of this, what do we get? Do we get GDP or do we get something else? What do we get? When we add these 4, NDP, GNI, GDP, guys, we get, remember, when we add these 4, we get GVA at a basic price. Remember, that is what we get. We don't get gross national income. We get gross value added at basic price. So from this gross value added, remember, to this only, okay, now this is extra, not in this question, right? To this gross value added, guys, you all must have equations in whatever tute or any note that you all are studying, right? Revision class students, at the end of your tute, all the note equations are there. So to GV at basic price, you add net indirect taxes. So this is the taxes on goods and services. Now earlier I have said other taxes less subsidies. That is taxes on production, guys, right? So like I said, maybe your building tax, right? Your property tax, right? Let's say, business registration, there can be some taxes, those taxes. Now net indirect taxes means the taxes on the goods and services. So to gross value added at basic price, when you add this net indirect taxes, now what do we get? Uh, Now you get GDP at market price. So remember that conversion, right? It's not needed for this question, but I'm telling you, right? This question, if you just write the 4 parts, it's enough. So from GDP at market price, right? You don't have to add consumption of fixed capital, guys, because inside operating surplus, okay, so I'll just say, okay, I'll say gross operating surplus, right? So inside this, it's already there, right? If you want, you can put it as a subcomponent, okay? But it's already there in this, right? Inside gross operating surplus, you get GDP at market price. So from GDP at market price, how do I go to GNI, gross national income? What do I do to this to go from here to here? Okay, now this is a simple calculation, guys. I'm teaching you this not because it comes for essay questions, because these comes for MCQs also, right? Because even if you're not writing the essay question, you need to know this. Okay, so GDP, simple thing. People who know y'all, I know y'all are kind of fed up. You add net primary, net primary income from rest of the world, right? So net primary income rest of the world. So how do you go from GDP to NDP maybe? Yes, GDI equals CE plus GOS. That's the same thing. CE is compensation of employees, GOS is gross operating surplus, MI is mixed income, other taxes less subsidies. So from this, right, from GDP, how can we go to NDP? Exactly. From GDP, if you minus, right, minus consumption of, remember from a gross concept, if you minus consumption of fixed capital, you get net domestic product. So in case they ask you net national income, then you have to go from here, right? So how do you get net national income? From gross national income, you minus CFC. If you minus CFC, you then get NNI. So you need to know that these are not the same thing, right? NNI, NDP, GDP, GNI, GVA, but it's not the same thing. It's not the same thing of saying different ways of saying the same thing. No, right? Each of this, there is a separate calculation. So that you all have to know, guys, right? Now, I can't make you all memorize the equation, that is on your side. Okay. And this will come with practice. The more questions you do, the more sums you make, the equation you all, sometimes, you all ask me, how do I remember this? So I keep on forgetting. But the best way to do is one thing I remember, start very beginning when the teacher taught me, right? I used to make like a short note, I paste it in front of my table and keep, and then I kind of look at it occasionally, then I remember. But towards the end, right, the more and more sums I make, now it's automatically there in my head. So that is how it happens. Now you all are not learning this for the first time now, right? So you are towards the end now. So you ideally have to know this, by practice now, not by memorizing. Okay, that is that. Just a little additional info. Okay, now these things. Now this is always there, guys. Explain whether the following transactions are included or not included. Okay, so I want you all to think wisely and let me know, right? A tourist hotel purchases 10 million worth of foreign made canned food. Do we include in GDP or do we not include in GDP? Included or not included? Yes, what is this? Tourist hotel purchases 10 million worth of foreign made canned food means imports, right? These are imports. Okay, you understand that they're purchasing something from abroad. Now, imports, do we include imports? No, right? Remember, in our GDP, when we're calculating plus exports minus imports, we are removing imports. Why are we removing imports? Because imports were not made in our country. right? Even though the expenditure was in our country, we are removing it because in GDP, we only take the final goods and services produced inside a domestic boundary. So that is produced inside Sri Lanka. So now this imported, this canned food, maybe it came from Australia, yes, and our people spent it, right? So there would have been an expenditure. That is why you remove that expenditure. You add exports and minus imports. So this is not included. Your basic argument should be that these are imported things and not produced in the domestic country. Okay. Then second one, a soft drink manufacturing company builds a new bottling plant in the capital city. Do we include or not include? This is easy. A company is making a new bottling plant. Okay, this is very simple, guys. It is included. Where is it included under? If I ask you that, where do we have this under? Let's say the expenditure approach on what? We have this under gross capital, right? Yes, under gross investment. Under gross investment also where? It's under gross fixed capital formation. It's a bottling plant, right? Fixed capital formation. In case you want it. Okay, question number 3. Investor buys 30 million worth of shares. Is another easy one. Do we put it or not put it? Yes, remember I said you shares, bonds, anything not included. But if you're getting a return from this, included. If the investor is getting a dividend from that share, remember I explained that clearly. Dividend he is getting included. But this is not included. Him simply buying the share, no. Because why? It's simply a transfer. Money is going from this place to that place. There is no productive activity taking place. So this is not included. C. D. A book publisher produces too many copies of a new book. The surplus copies that did not sell this year were added to inventories. Now, that means now they have stocked it and kept. So can you include it in GDP or not? Included or no? Yes, remember, right? This is included. This is what comes under change in inventory. Remember, in your gross investment, you have something called change in inventory. Now, these books, right? This book publisher, even though the publisher has not sold all the books, it was produced during that year, no? So it has to be a part of that year's output. It's not you, just because that person does not sell, you can't say no, that is not the output of this year. He has produced it during this year. So therefore, remember, whatever good, even though we have sold it or not, right? If it has been produced and let's say it is a part of inventory, you have to include that in GDP. Okay, so things like this can come in MCQ. So this is also included. A is not included, B is included, C not included, D again included, right? We discuss a lot of questions like this, so I'm not going much more in detail. And I didn't type anything also, given that you're paying full attention. Okay, done with 2016. Can we move on to 2017? Yeah. This is actually a very easy question. If you know your thing, this 12 marks is nothing. And at least 10 out of the 12 you can get, guys. It's not rocket science. You just have to know. Now, trust me, why, for example, unit 1 might be easy for you than, let's say, unit 5, because you have put more effort to unit 1. Compare unit 1 and 5. Which unit have you studied the most number of times? Unit number 1. Which unit have you done more questions? Unit number 1. So obviously, unit number 1 will be easy. If you put that same effort to, let's say, unit number 5 or any other unit, those units will also be easy. Get it? So it depends on your effort, guys. It's not that these lessons are rocket science. Okay. There is a fourth and fifth part. Fourth and fifth part is from macroeconomic equilibrium, if I'm not mistaken. That is why I would have not put it here. Can someone just check, or have I made a mistake? Fourth and fifth part of this question, is it from macroeconomic equilibrium? They would have asked to maybe calculate equilibrium national income, or I don't know, maybe something like that. Yeah. So that we'll do when you do unit number 6, all right? Okay. So come into 2017. 2017, Okay. So here I wrote A levels, but I did not do this question. But I did question number 5 though. I did the macroeconomic equilibrium question. I did not do question number 1 in A levels, I remember. Unit number 1, I'm good at it, but I don't like it. Like in a sense, I feel I can't score the fullest marks out of it because I try to score the 20 out of 20. I somehow plan and go to try the 20 out of 20. So, but I'll be honest with you all, in my year, I anyway was not planning to write national income accounting because national income accounting in these years, right, 2016-17, there were a lot of changes because if now in our theory class they taught us one national income accounting. When it comes to revision class, it has changed next year. Now it is another whole different calculation. Then you come a little later, that's another whole different calculation. So it kept on changing. So there was a lot of risk in writing, so we did not really bother. We kind of left it. But macroeconomic equilibrium was okay, right? So that we studied and went. We did all the papers. Same questions come, guys. You trust me now. I have told you all how to do the papers, right? You do the papers at a stretch, you realize that it's the same question. So these years, 2020 and stuff like that, guys, it will be you all will have now national income unit is set. Now there are no changes. So you all will get a one question from national income and macroeconomic equilibrium. Okay. Right. 2017. What is meant by injections and leakages from the circular flow of income, and identify the leakages in the aggregate expenditure in an open economy with government activities. So what are injections and what are leakages? Injections. What is an injection? What is an injection? Okay. Okay. A cash inflow. How can you expand on that? So injection is, I'll give you all a simple, things. I'm not going to give you much rocket science here. So you can simply say, right, an inflow. You can say, maybe you can say a cash inflow into the circular flow of income. What would this do? Would this expand the circular flow of income, or would it contract the circular flow of income? Would it strengthen or weaken it? It would expand, right? So any injection that comes in, and also you can say it expands the circular flow of income. So in an open economic sense, a four-sector economy, what are the different types of injections we have? Right. So in a simple economy, we have investment, right? So when we come into a closed economy with a government, remember we have government purchases, right? Or government, you can say this government spending, right? And also, what is the final one? The final injection that I'm missing here is export. So this is what an injection is. Whatever that is coming, whatever that is bringing money into the circular flow. Now, when there's investment, money is coming into the circular flow. Yes, you can say inputs are inputs. So inputs into the circular flow. Yeah, investment, government purchases, exports. So then what is a withdrawal, or what is a leakage? A leakage is simply the opposite of this, right? So for a leakage, you can say, right? You can say, what can we say? We can say it's a cash outflow, right? A cash outflow from the circular flow of income, right? And then what does this do? This contracts the circular flow, right? You write that. And then what are the examples of this thing? So for savings, you have investment, savings in a simple economy. Then you have taxes, right? And then we have imports. So this kind of thing, if you can write it in a proper sentence, you will get your full mark. Okay? That is question number 1. Explain what is meant by injections and leakages from the circular flow, and identify the leakages. Okay, they are only asking the leakages, right? identify the leakages. So leakages, you don't have to give examples for this. So maybe these leakages, you can maybe write in one sentence what these are also. So you can say savings are the money, right, that businesses and firms tend to put into financial institutions, right? So the money goes out of the circular flow. You can say taxes are again the money that are paid by businesses and households to the government. Money is going out. Imports, you can say these are the money that is paid by again businesses and households to the foreign sector whenever they buy goods. Is there any changes in national income accounting? Changes in the sense, now your syllabus doesn't have changes, guys. There were changes in the period 2016-17. 2015-16-17, there were a lot of changes, especially in the income approach, in the output approach and all. There were a lot of changes. So that's why in all of these papers, now see, even in 2017 paper, all the calculations come from the expenditure approach. Expenditure approach did not change. The other approaches changed. Now, remember, you all study, under income approach, you all study compensation of employees, gross operating surplus, and all of that. So in somewhere around 2016, that was not the case. In 2016, it was we say corporate profits, we say rent, we say things like that under the income approach. So now I don't say corporate profits, rent, right? So how do you explain these guys? You simply say what happens here. So savings, you can say the money that is going out from businesses and mainly by households into the banking sector, right? Taxes, you can say money that goes out from both firms and households to the government. Here you can say money that goes out, right? Whenever we purchase goods from an abroad country, from a country abroad. So it's simply showing that the money is going out, because this question they're saying, identify the leakages. So maybe just naming it is not enough. I can't remember the exact answer scheme. What does it say? But maybe you can write one sentence next to it. Okay, right. Then they're asking what are the major components of gross fixed capital formation. Now, guys, for a question like this is actually a hard question, right? For a question like this, you need to know the central bank report, right? In the central bank report, under all of these approaches, they have given you much in detail. So what do you think are components of this gross fixed capital formation? What kind of things can guys, they're not asking you gross capital formation. If it was gross capital formation, inside that you can say there is gross fixed capital formation, change in inventories, depreciation, you can say all of that. But they're asking you gross fixed capital formation. So they're kind of asking you for the examples, guys. So what do you think comes inside this? And they are not asking you for any example. They're asking you for the major components. What are the biggest components in this? So for that, you need to know a bit of, common sense. Your central bank report information is a little needed, right? So just check the answer scheme. I'm not very sure, but as far as I remember, there is buildings, right? So buildings and whatever that you make there, that this is one part, right? Buildings is one. Then if I'm not mistaken, there is machines, right? Machines, so I'll say machinery. Can someone just check the answer? This thing I also don't remember the exact major components. If I want, I can check the 20. So we check the 2019 CBSL report. Okay, so I'll just show you how to check this if you really want to, right? You can go into this, right? You go into the chapter. This is the national income chapter, chapter number 2, right? So in chapter number 2, then you do a little bit of reading. Okay, so when this comes, maybe gross capital formation, they're saying is 27%. So under gross capital formation, main thing is change in inventories. You can go. So now this will be based on all of these approaches, right? If you look at if you have had a look of the central bank report, you'll understand how it's very. So first they start off that what the output approach, right? So then after a while, right? After a while, now it's still output approach, right? And then they talk about the income approach. Still output. We talk about the output, transportation, still services. Okay, so now you go in the expenditure approach. So you have this thing, you have private consumption, you have health activities and investment, right? So there has been favorable growth. Okay, so this is okay. This is not my tweet, guys. This is the central bank report. Gross fiscal formation. Then they're saying this mainly driven by. Let's say if there's a table that would make things easier. No table. No. We have to read. Okay, so inside this paragraph, there would be ideally the components would be there. So we'll just check so construction, right? Largest category of investment expenditure. So you can, in your answer, one can be construction. Then you can say investment goods here, building materials, right? Capital thing, that is what buildings and things that we highlighted as the first point, right? You can say that. Answer says transporting. So that would have been basically on that year. Maybe yes, that would have been transport. Here. So here, meanwhile, investment on machinery and equipment, weapon systems, transport equipment, information and communication technology equipment, intellectual property products showed a growth. So for this, you need to know, see, from the central bank report itself, you can kind of get a lot of information, but here, this is where it comes from. So if you have a rough understanding about the central bank report and you've kind of gone through, you will be able to, kind of answer these practical questions. So for your answers, you can write these. Apart from buildings and machinery that I told you, you can write this, right? So machinery equipment is anywhere there. Weapon systems, transport equipment, information and communication equipment, right? Intellectual property products, right? So intellectual property products maybe, things like, let's say, softwares, stuff like that, right? So you write that, you get your marks, fine. So those are the things there. I'll just add is so there was weapon systems, there was transport equipment, then there was, I think, ICT equipment, right? So things like that you can kind of add. Is there was intellectual property. So this comes from your common sense, but this would have been a little bit of a hard question for a student who did not really know the things. So remember, now when the question is hard, you don't have to write a lot, because they're simply asking what. If you know it, you get the 4 marks. If you don't know, go on. You don't have to, you can't write paragraphs here. Okay, done. Then question number 3. Now this is a question that you can now remember, guys. You have to be smart. I'll tell you why. Now in a paper, now, sometimes you might feel, okay, major components, okay, I know very much in details. I'll explain that also. But remember, they set this, let's say this question number 4, where a student can, let's say, finish this in somewhere around 30 to 35 minutes. So if they are giving you, a question on what here, what means just to state where you can finish it, let's say in 2-3 minutes, that means they want you to use that time for some other question. Now, for here, now this question is you can write a kind of a big answer. Explain how GDP is calculated and show how GDP at market prices is different from net national income. Now, how do we show this? How do we answer this part? How is GDP calculated? You need to show under all 3 approaches, right? So guys, don't write the equation for this, but explain the equation. So say under the expenditure approach to calculate GDP, we take into consideration private consumption expenditure, government consumption expenditure, let's say gross investment, and also net exports. Under the income approach, we take these things. So that is how it's calculated, kind of, right? Don't write it in an equation format, but the same equation, you write it in words. Okay, so how do you structure this answer? Because I'm not going to show you how to calculate GDP, right? Hoping you all know that. So how is GDP calculated? You explain the 3 approaches. You say to calculate GDP, there are 3 main approaches, that is income, output, and the expenditure approach, you explain one of them, right? Each one of them you explain. So you get 3 marks for that kind of, right? Of saying how it's calculated under the output approach, how it's calculated under the income approach, how it's calculated under expenditure. And then can you see that there's another small part in this question? Show how GDP is different from net national income. So how do you go from, can you all tell me what is the difference? From GDP, how do I go to net national income? What do I do? What and what changes should I make? From gross to net, how do I go? From gross to net, I need to minus depreciation or consumption of fixed capital. From domestic to national, how do I go? I need to add net primary income, net factor income from abroad, right? So a simple thing. So you can say, okay, the difference between GDP and NNI is the consumption of fixed capital and also the net primary income from abroad. So you simply do that, guys, you get your marks. So that is how you need to structure your answer. You first say there are 3 approaches. You write about the 3 approaches in, let's say, 2 to 3 lines. Okay, so maybe have separate paragraphs, guys. 3 lines maybe is 1 paragraph. Show your points, guys. Don't put all your points into one big paragraph, because then it's hard for the examiner to kind of mark. I'll tell you all about the writing tips and stuff maybe in a seminar before we start the fast track in April, right? But for now, just know those. Okay, are we okay with that? Can manage that, right? Because that is simply theory, guys. You have to know your thing. Okay, then you have this. Now the fourth part is again a little bit of a tricky question. The fourth part is saying, why do we consider a business cycle expansion to be different from economic growth? Now, it's a very simple thing, right? Now, in the business cycle, you know, expansion, right? You have the potential output, you have the actual output. So, actual output going like that, right? So, this stage is called an expansion, or this entire stage is called an expansion. So, they are asking you, why do we consider expansion to be different from economic growth? Now, for this, you need to know a bit about unit number 10 and 11 also, what economic growth is. Not very much important, but in a simple context at least. So, how do you write this? You simply, right, have to say what an expansion is. You simply have to say what economic growth is. So, what is the expansion? Right? So expansion, you can say expansion, right? You have to highlight points, say this is where the actual output is increasing, that you have to highlight. So you have to say actual output is increasing. And when the actual output increases, can you all tell me what happens to unemployment and inflation during this expansion stage? When you're going up, what happens to unemployment? Does it increase or does it decrease? Unemployment decreases, right? It falls. Nice to see a lot of answers coming. Unemployment decreases. What happens to inflation? Inflation, does it increase or does it fall? Yes, inflation increases. Remember, always remember that unemployment and inflation has a negative relationship. But there is something called stagflation. I don't know if you all have learned that. Have you all learned something called stagflation? Yes. Okay. So stagflation, I have not put it in my theory. It's not that important. But stagflation is where unemployment is also increasing, inflation is also increasing, right? That is not really that important, right? But usually unemployment, inflation has a negative relationship. Yes, an inverse relationship. So if unemployment is falling, that means inflation is increasing. Or if inflation is falling, then unemployment is increasing. So there's always a negative relationship, except in a situation of stagflation. Stagflation is where unemployment is also increasing, inflation also increasing. Stagflation is not that important. So far, I don't think there has been any question on stagflation. Okay. So you write about this, right? You write about this, and then you have to make an important point in a expansion. Remember, in an expansion, what is happening is that you're using the previously unutilized resources, right? Unutilized resource. So when your economy went down, right, when the business cycle went down, a lot of people lost jobs. There was a lot of unemployment. So now in an expansion, you're using those resources. You have to highlight that. But in economic growth, what happens, guys? In economic growth, right? So when you're writing about economic growth, you have to say economic growth is a long-term concept, right? Now, if you look at, okay, now even expansion, you can say, it increases and then later after a certain point, it can fall. But economic growth, there is no coming back. If it grows, it grows, right? So economic growth, you have to say, is a long-term concept. And what happens to the PPC because of economic growth? PPC, point inward or point outward when there's economic growth? Point outward? It's not point outward, it shifts outward. Economic growth. PPC shifts outward, right? So when the PPC shifts outward, what does that mean? What does that mean now? How does a PPC shift outward? So a PPC shifting outward means, guys, right, that the potential output, right? Because the PPC shows the potential output of the country. The potential output has increased, right? So in expansion, you're talking about actual output increasing, a short-term phenomenon. This can come up, go down, do all of that. But economic growth is a long-term phenomenon, right? That is where the entire PPC of the country shifts. And also because of that, that means the potential output in the country is kind of increasing. Then why does economic growth happen? Oh, what are the main two reasons for a PPC to shift? There are two main reasons, guys. When those change, the PPC will shift. What are the reasons? One reason, right, is the what? Okay, technical, yes, all of that is there. It's the factor endowment, right? That is how much of factors you have. So you can say factor endowment has increased, and what has happened to productivity? Remember, factor endowment and factor productivity are the 2 points. And factor productivity. So factor endowment means resource stock, guys, right? So factor endowment means how much of factors of production you have, how much of stock of resource. So factor endowment increase. In other words, you can write increase in resource stock also. Okay. So and also factor productivity has increased. So under this factor productivity only you have technology improvements and all of it. Okay. So if you give in something like this, if you give in an answer with these kind of points, right, you will get your full mark. So when you properly define these two concepts, right, when you factor endowment is the same, yes, yeah. So when you properly define and explain the concept, automatically the difference is shown. So here you are saying actual output, here you are saying potential output. Here you're, let's say you talk about unemployment decrease and stuff means you're using the previous utilized resources. But here what you're doing, you're creating new resources. There are new resources now. The factor endowment, the land, labor, capital, entrepreneurship has now increased. Not that you are using the previously unemployed ones. So don't think about too much now. When you get a question to kind of differentiate something like that, right? You don't have to think, oh, I should draw a table and I should do that. You don't have to do that, guys, right? Simply explain the two concepts. Take two paragraphs. If you have properly explained the two concepts, automatically the difference is visible. Okay, so don't go into drawing tables and economic growth is this is that. Don't take that approach. Okay, are we fine here? Yes. Chip. Okay, so let's get into the sum. When you draw the economic growth on a PPC, yeah, if you want, you can draw the economic growth on a PPC and show, and then if you want, you can show the this thing on a this thing, business cycle. So in the business cycle, economic growth is not really the whole thing here. Economic growth, you don't really show it in a business cycle. But if you really want to show it, I don't know if it is technically correct. I haven't seen it anywhere. But remember, this is the potential output. So you can show this increasing as the economic growth, but usually we don't show that. So don't try to show economic growth in a business cycle. Simply show that in a PPC. Right? Because in your syllabus, I have not seen it anywhere. Okay. Right. Last question. Following macroeconomic data for the year 2016 are given. Calculate GDP. Guys, this is GDP under the expenditure approach. Can you all calculate this GDP expenditure approach? And then they're asking you personal disposable income. GDP expenditure approach. So what and what do we have? Yes, you simply need to know the components now, right? So GDP expenditure approach. And remember, you have given you values for expenditure approach. So be smart enough to use the expenditure approach. You can't use any other approach. Okay, so then how do we calculate, guys? GDP under the expenditure approach is equal to C plus I plus G plus net exports. You write the equation. How much is C? Can you give me numbers now? C is consumption expenditure, 700, right? Investment, have they given you gross investment directly? Yes. So investment, 200. G is government purchases. How much is government purchases? 300. Remember, they have given you transfers there. You don't have to take transfers there, right? Don't take transfers. And net exports. So net exports there is 375 exports minus imports, that is 325. So net exports is plus 50. So when you solve this, how much do you get as GDP? 1,250. Yeah. So now GDP, right? In other words, guys, you know, this is Y, right? I'll just show you that. GDP is Y. So can you see in part B, they're asking personal disposable income. In part B, guys, transfer payments are not a part of GDP, you know. What are transfer payments? Transfer payments are like pensions, right? Let's say interest that is given. Remember, we say transfer payments are not taken into the consideration of GDP because there is no productive activity taking place. That's why we don't take that. Okay. So then from GDP, now that is part A, right? This is part A. How do we go to part B? Part B is saying what is personal disposable income. So how do we go calculate that? Personal disposable income. Now, you know, this is Y. So from Y, how do you go to YD? Yes, welfare and stuff comes under transfer. So from YD, from Y to YD, guys, so if GDP is Y, right? How do you go to YD? So from this, you minus the taxes and you add the transfers. Then you get, right, disposable personal income. Doing this in leakage withdrawal methods, I don't think you can. Leakage withdrawal methods, you do macroeconomic equilibrium. You don't do this really, right? So disposable income, how much is that? We have a GDP of 1,250, right? Our taxes are 550 and our transfers is 300. So minus 550 plus 300, we get an answer of 1,000. That is your final answer, guys. So simple two calculations. If you know the equation, this is not even going to take you 1 minute to do, honestly. Okay, so maximum 2 minutes, you can finish this question. So it's that easy as long as you know the equation and how to do. Knowing how to do will come from experience. The more questions you have done, the more you have practiced. Now, next time you see a exact question like this, it's going to click you. This is what I have to do. But if it's the first time you're doing this question, then there is a problem. It will take some time. So that is why I'm telling you, practice is very, very important. So yes, they're asking for personal disposable income, but when you go to personal income, right, remember you have to remove depreciation. You have to remove, let's say, retained profits. But in this, they have not given you any of those information. So if they have not given you any of those information, means those that values are zero kind of. So that is why you go from that to that directly. So I know, right? From GDP to go to personal income, we have to, remove social security contribution. We have to remove corporate retained profits. We have to remove, a lot of things have to be removed. Then we have to add interest payments. We have to add, let's say, pensions. We add all of that. But here, simply they have not given you values means those values are not there. Can't we take C as personal income? No. You can't really take C as personal income. Okay. Okay, done. Are we okay with that question? Step 17. This was a good paper overall. This is good. It was a little challenging and a good paper. Okay. We'll move on to 2018. Okay. 2018. State whether the following are included or excluded. Okay. Always question. Okay. Housewife grows vegetables in her home garden during the current year and the entire harvest is used for food consumption. Included or not included? I like this question. Think. Guys, it is included. The goods that you produce for your own self is included. But remember, they have given you the word housewife to confuse you. Goods for self-consumption included. Services for self-consumption is not included. Now, they are not saying this housewife is looking after the grandparents or looking after the children. No. That is a service. But here the housewife is growing vegetables. That is a good. There is a harvest coming out of it. So that will be included in GDP, right? You can say this is included in GDP because this is a good produced by households for themselves. It is taken, right? Okay. Retired worker receives a pension payment, included or not included? Pensions in GDP. Guys, remember pensions are transfer payments, right? They're just getting the money. There is no productive activity taking place, so not included. Okay. Part C, including. What do you mean including? C is excluded. A is included. A included. B excluded. Part C. Motor vehicle dealer earns a commission for selling a second-hand car. He's selling a second-hand car. Guys, remember, right? The value of the second-hand car not included, but the profit he makes, right? That is included. Remember, second-hand transactions. No, let's say he buys a car for 100,000, he sells it for 100,000. That 100,000 you don't include in GDP because it's already been counted. But let's say he buys that car for 100,000. Let's say he stores it and keep it in his house or for display or something, and later he sells it for 110,000. That commission, that 10,000 commission should come under GDP because that is his value addition. He might have not put a new part to the car. Value addition does not mean you putting a part to the car, no guys. Value addition can come in any form. So he is actually displaying that car and finding a buyer. There is some value addition from there. So that 10,000, that commission he makes is included. The whole 110,000 can't be included. So if it's a second-hand transaction without a profit or something, that no. But if there is a commission, that small commission part has to be there. Got it? Okay. So a motor vehicle dealer earns a commission, it is included. Yeah. If they simply say a motor vehicle dealer sells a second-hand car, then no. But they're talking about the commission here. No? So they're saying a dealer earns a commission for selling a second-hand car. Is that commission included or not? Yes, it is included. Right? So even in usually auctions, we say no. Right? But unless specifically they say that auction is selling at a higher price or something, then yes. Okay. Okay. A mother helps her daughter to learn a lesson at mathematics at home. Yes or no? Help daughter. These are services for self-consumption. Services for self-consumption, no. Number one is a good for self-consumption, producing some food. That yes, right? Growing vegetables. D, is a service. So no, you all should know the difference between A and D, right? Guys, there is a problem. Okay, done. Okay, calculate GDP at market price. Can we get this fast? Now they would have given you a lot of unwanted information. Be smart. Get GDP. This is simply expenditure approach. So expenditure approach, how do we get GDP? We just did a question last paper. So GDP is simply C I G plus net export. So how much is consumption? Consumption C, private consumption expenditure 3000. Investment, they are saying gross domestic fixed capital formation. That is a part of investment, right? 800. Then there is changing stock. Can you see? That is also a part of investment. Is there any this thing? Nothing else, right? So that is 750. How much is government purchases? They are directly giving 900. Net exports is your exports minus imports. So 450 minus 600. Net exports is a minus 150. So now you solve this, guys. See, now they're giving you 4 marks for this basic calculation. You know why they're giving you 4 marks? Because they give you a lot of unwanted things. They see whether are you going to take, are you stupid enough to take this? Now you have to remember these things won't come. Net taxes on production expenditure approach doesn't come because taxes are already inside these. You don't take. Now, net primary income, you take to calculate GNI, right? Gross national income, not gross domestic product. So that again does not come. Then again, yeah, those two. So they're giving you that to confuse you. See if you will be a fool to get all of that. Right? Okay, so when we solve this, how much do we get, guys? 4,500. Yes. Okay. So simple as that. Now this equation, write it in bigger forms, right? Don't say C plus I plus D, say consumption, investment, this, this. So it's the easiest 4 mark you can ever make, right? That is that. Okay. What are the limitations of GDP as a measure of people's living standard of an economy? Now, this I even explained this when we did economic growth and development. What are the limitations of using GDP or national income data to measure growth and development? What are the limitations, guys, in this GDP to measure the living standard? Basic limitations. What are the problems in using this GDP? What do you all think? What kind of problems do you think are there? So one thing you can say, right? GDP does not take into consideration, right? Let's say what? What can you say? Does not take into consideration what? Yeah. So you can say does not take into consideration many, let's say, productive activities, right? So for example, right, there is something called an unobserved economy, right? There is a unobserved economy, right? It does not take into consideration services for self-consumption. Okay, you can say transformers also, but not a big point, but yeah, services for self-consumption. Okay, doesn't take these. Then you can talk about what else can you say? You can say now living standard means, right, your facilities and stuff like that. You can say, you know, GDP, right, does not show, right, does not show the income distribution. Now, for example, right, maybe from 2018 to 19, the GDP of the country increased, but maybe the benefit out of it, right, went to the rich people. The poor fellows got even more poorer. So simply because GDP increased, we can't say, ah, now everyone's living standard is high, poor fellow is also now making money. You can't say that. So it does not show the income distribution. That is the problem. Exactly. It does not show the effects to the environment, the environmental effects, right? Sometimes maybe the GDP could have increased, right? Because you have cut down a lot of trees and maybe build hotels there. That is why it would have increased. So the effect over, okay, so I'll just copy and paste the answer, perfect answer. Okay, so it does not show the effect, right, over environmental resources due to production. Then you can also say many activities, right, there can be actual errors in this, right? Now how is it possible to calculate the actual GDP? It's usually always underestimated. Now just even imagine, right, now me, right, as a, now me doing classes, I'm a sole trader, right? So I don't have the necessity to publish accounts. So I don't really, let's say, do that too. I don't have to publish financial statements to pay corporate taxes. I don't have to do that because I'm not a company. I'm just a sole trader. So when I'm a sole trader, right, now let's say all the income that I might be earning from, let's say, classes, that should also be a part of GDP, right? I'm also doing a job here, right? But does that come? No, that does not come because there is no way. There is no this thing shown, no proper records there. Okay, so a lot of things like that is there. Okay, you can talk about that. What else do you think we can say? Anything else? GDP. Okay, interest payments. What though? How is that a limitation? Yes, do it yourself. That is services for self consumption. This is do it yourself services, right? Okay, literacy rates, GDP per capita. Okay, how is a limitation? I want a limitation. They're asking limitations. Now you all are saying GDP per capita, you're saying literacy rates, but where is it connected to limitations? How can you word it properly? I'm not saying you're wrong, but how can you word it properly? Okay, so you can say, okay, there was another point I missed. Someone said GDP does not show leisure, right? Does not show the leisure that people has. Now when you're talking about living standards and stuff, you're looking at how much of free time people have, how stress free are they, right? So all of that is needed. So but GDP does not really show that. So GDP is just showing a number. Income for people who earn foreign countries working in foreign countries, we don't include those. Yeah, not included. Now I'm not asking you what are included and what are not included. My question here is, or the question in this paper is, what are the limitations of GDP? Now, GDP will, using GDP, you can calculate per capita income. So if the per capita income is high, you can say, people have a lot of money, living standard is high. But just that alone is not enough because that GDP value can be a little bit, there can be a little bit of issues. So then you can say, even this GDP, right, it takes into consideration all the, harmful products, the alcohol, the cigarettes, everything is there in GDP. So again, there can be a problem there. Changes, developments in the government services, exactly, that's not shown, right? uh exactly. Now GDP per capita you might not be able to properly calculate because the GDP itself is wrong, right? So those kind of issues you can write. This is also, you can get information from the economic growth and development tute. If any of you have studied that economic growth and development, it should be the revision class students. We finish the syllabus, right? Economic growth and development tute recording, go and check. Exactly, deforestation, overfishing, murders, terrorism, all of that again is not really shown. So for living standard, it's not just your income. GDP might show your per capita income, but living standard is not just the income. Plus, this GDP value is wrong also. Government interest payment is not included, guys. It's a transfer, government interest payment. It's not included in GDP. But when you take personal income, we include government interest. Okay. Then we have this. Explain the following terms. Housewife work are not included. Yes, housewives work in, if the housewives are doing a service, not included, guys. Remember I told you. But here in this here, housewives are growing vegetables, guys. Just check the answer scheme. It says included, right? I'm pretty sure that's what it says. This one is there because they are making some vegetables, right? Vegetables are goods. So goods should be included. Just recheck the answer scheme and let me know if in case I'm wrong. I don't think I'm wrong, but yeah. But if the housewives are looking after the children or if they are looking after the parents, then it's a service, guys. Then not included. Okay. So this, yes, is included. Okay, confirm. Okay, then you have explain the following terms, guys. Explain the following terms. I'm not really going too much in detail. Value added, you all know. I explained what is value added. We did that in the previous question. What is inventory investment? Guys, inventory investment in very simple terms mean the raw materials, semi-finished goods, and the finished goods, right, of firms, right? That is what this is there. Are free services provided to others as charity? Free services provided by whom to others? If it's provided by a business, yes. By the government, yes. Okay, so inventory investment, you simply have to say it's the raw materials, right? The semi-finished, I'll just say semi-finished here, and the finished, right? The finished goods, the semi-finished goods, right? Of an economy, of let's say businesses. That is what we call, guys, inventory investment. Inventory investment means the money that has been put into these raw materials. Yes, change inventory, right? So the raw material, semi-finished goods and finished goods, right, that are there with a business are called inventory investment. Okay, so you can also talk about, uh, the level of inventory investment depends on the production, level of production, and also depends on the demand. So let's say you have very high levels of production and stuff, then you will be having high levels of raw materials, finished goods, right? But and also let's say in the future you forecast a huge spike in the demand, so again now itself you might have a huge thing. Now for example, masks, right? These days there are a huge quantity of finished goods of masks. It might have not been sold, but it's still there because the demand is high, and that is what inventory investment is. Then what is GDP deflator? Guys, can someone give me the equation for GDP deflator at least? Equation for GDP deflator. GDP deflator equals, really can't remember this. GDP deflator, guys, it's your nominal GDP divided by your real GDP. Okay, real GDP into 100. So you can write this mark, this equation, you might get 1 mark. Plus, what are we doing here, guys? Why are we using this GDP deflator? We are using the GDP deflator for what reason, right? So you can say GDP deflator is used to remove what? The inflationary effect, right? Remove the inflationary effect, right? And calculate the real GDP, right? Calculate the real GDP. So something like that, if you can say, it's more than enough. Can we say depreciated also instead of deflated? I have not heard that word, depreciated. I'm not very sure, but I think it's called GDP deflator. I'm not very sure if you have. I have not heard that word though. I'm not very sure. Just deflator is the word. Okay. Okay. Final one. This is a hard one. Every question will have a little bit of a hard one, but this is something you know if you have learned international trade. What are non-produced, non-financial assets? Non-produced, non-financial. So when they say non-financial, that means not, it can't be shares, bonds, commercial papers. No, because those are financial assets. Then what are non-produced, non-financial assets? What are these? Right? So now remember, now this is like a very small component. This might come under gross investment, right? Gross capital formation. Remember, gross capital formation. We had gross fixed capital formation. We had change in inventory, right? We had things like that. So under that, sometimes, right, you can put this also, non-produced, non-finite. The value is not that much, so we don't really study that clearly. Okay, so you can put non-produced, non-financial. So you can say this comes under this, right? This comes under gross capital formation. And what are the examples that you can give, right? So examples like, let's say, the all natural resources, right? Not produced in the home country, non-produced assets. Yeah, so anything that is not produced, so natural resources. Now, for example, let's say the land, let's say the forest, let's say the water, right? Those stuff, right? Land, let's say forest, let's say water, right? They're non-produced. And apart from that, what else can you say? Apart from that, you can also talk about, let's say, licenses, right? You can talk about brand names. You can talk about patents. Those are also non-produced, non-financial assets, right? So this we study in international trade, exactly, goodwill, right? We study these in international trade. If any of y'all would have studied, I'm guessing y'all would have, right? So that is non-produced, non-financial assets. That's a bit of a tricky one. I understand that not everyone would have got that right. If you know, these are not financial, guys. When they say financial, they are referring to things like shares, bonds, treasury bills, let's say commercial papers. That is what they say financial. Now, license brand names and stuff are not really financial. Okay. Done. Okay, this question done. GVA at basic price, CE net other tax and production is correct. For the formula, if you add net taxes on products, it will become GDP and MP. Yes, correct. GVA at BP is equal to CE GOS. Okay. 2018 done. 2019, I'm not going to discuss the old syllabus because I felt the same question that was there previously as well, right? So we'll go into the 2019 new paper. It's an easy one. Which of the following government expenditure are collective and which are individual? Now, collective individual means, right? Collective means when the government spends, right? They can't identify whether, per person it is this much, you can't identify. Individual, you can identify, okay, per person it is this much, the expenditure is. Now, fertilizer subsidy, do you think it's a collective thing? Okay, now fertilizer subsidy is given to farmers. So can you say, okay, for this farmer, the expenditure was this much? Or can't you say that? You can say, right? So for a farmer, let's say you give 100,000 worth of fertilizer subsidy. So you can individually say that's an individual expenditure, right? This is individual expenditure. Let's say medical research. Now, when you do medical research, can you say per person the medical research expenditure was this much? Can't, right? You can't say per person medical research expenditure was this much, can't. So these are collective expenditure, right? Then police and fire brigade. Can you say per person the expenditure of police is this much? Can't, right? Can you say per person the what police expense much? Can't. So this is also collective, right? And then you have school midday meal. Now that you can know. Let's say one student is getting let's say a kiri packet and this. Guys, there was this thing, no, where I don't know, last year or something, right? Where the government proposed to give students something, a meal. I remember in universities also there was a story, a milk or something. Did you all get? No, I think it was a milk packet or something. There was some story last year, I remember. Milk, yeah, that was something. I can't remember exactly the story. For small fellows. No, but even I remember for university also they told me, because we were also waiting to drink a milk packet. Because in university we are very budget, no guys. We drink a plain tea because in university it's very cheap, right? Lunch is 50 rupees, plain tea is 5 rupees, right? You can buy a roll kind of things for 15 or 20 rupees, right? So that is how, we are very budget. So when you get something free, it's like a big thing. Okay, so school midday meal is, you can actually say for one person it's this much. You can say per student, it's kind of this much. So school midday meal is again individual. Okay, school near school that kept milk packets. Okay, milk packets in your house. Not bad. 2020 or 90s. No, no, it was recently. I remember recently last year there was a story because I remember we were also discussing, we were also waiting for that milk packet to come to our uni, but we never got it. Okay. You have been given the following data for a hypothetical economy. Okay, they're asking you for GVA at basic price, gross domestic product, net national income, gross national disposable income. This is simply, right, a calculation on the income approach. So income approach, can you all tell me how do we calculate part A? Gross value added at basic price. Now I showed you this earlier also. So you take compensation of employees, you add gross operating surplus. So gross inside gross operating surplus, there is mixed income also, right? So inside gross, what you have to know is inside gross operating surplus, there is consumption of fixed capital because they're saying gross. Gross means depreciation is already inside that. So CFC is already inside. You don't add CFC again. Okay. And then you have, let's say, mixed income if there is, right? No mixed income in this question. And then can you see other taxes less subsidies? Other taxes less subsidies on production. So that is GVA at basic price. So can you, it's a very simple calculation, guys, if you know the equation, trust me, right? So consumption of, compensation employees, 25, gross operating surplus, 6,000, other taxes less subsidies, 50. You add all of this, how much do you get? 8,550. Okay, just recheck with the answer scheme also. I might make a mistake here and there. It's a 2019 paper. Okay. Okay, then how do you get from GVA basic price? How do you go to GDP? How do you go to GDP? To gross value added at basic price, what do you add? You add net taxes, right? Net taxes on products. Adding net taxes on products means you add tax minus subsidy. That is what net taxes mean. Net means tax minus subsidy. So if they have not given you net taxes, you have to add the taxes minus the subsidies. Okay. So GV at basic price, you calculated before 8,550. Taxes on products 1,200. Subsidies on products 250. So others you can say net taxes is 950. That is equal to 9,500 GDP. Then they're asking you for net national income. Okay. So from GDP, how do you go to NNI? I showed you this before also. NNI. So to GDP, from gross to net, how do you go? You have to minus what? Gross domestic to net domestic, consumption of fixed capital, depreciation. From domestic to national, what do? You add net primary income, guys, not net secondary income, not net current transfers, net primary income, net factor income from rest of the world. So can we do that calculation? It is an easy 8 mark that you can ever score, right? GDP 9,500, right? They're saying consumption of fixed capital. Yes, can someone tell me the number? I can't. I know 700. Okay. Sorry, minus 700. Right. You have to remove net primary income from rest of the world is a minus 400. So how much do we get? Guys, just because that is minus 400, you don't write the equation wrong, right? Equation has to be plus net primary income. Whether it's a minus or plus, you show it like this. Don't say minus 400 because that means you're writing it wrong. The effect is the same. Understand? How much do we get here? 8,400. Okay. That's net national income. Now they're asking you gross national. Now see again, now see net national income. Here they're asking gross national income. So what we'll do is we'll go from GDP itself. From GDP we went to this. Now from GDP we'll go to this itself without going from this to this. Okay. So how do you go to part D is gross national disposable income. You have GDP. From domestic to national, what do? You add. Okay, so I'll show you steps below. So if you take GDP, right, how much is our GDP? 9,500. So for GDP, if you add net primary income, right, how much is our net primary income, guys? In our example, it's a minus 400, right? What do we get here? What is this? The answer is 9,100. What is this? This is called GDP plus net primary income is called GNI, right? GNI. So GNI is 9,100. So now they are asking you from GNI, right? They're asking you gross national disposable income, disposable GNI. So how do you go from GNI to disposable GNI, guys? So let's say this is disposable GNI. How do you go from there to there? What do? You need to add, guys, net current transfers or net secondary income. So how much is net secondary income in our example? 1,000. Yeah. Okay. So then we get disposable GNI 1,100. Guys, it's a very simple thing. Sorry, not 1,100, 10,100. Right? It's an easy thing. If you know your equation, guys, trust me, right? Scoring this 8 marks is one of the easiest questions ever, right? And this 4 marks also is very easy. So direct 12 marks that they give. Can you see this 2019 paper? Remember I said from 2019 onwards, unit 5 and 6 is together. So they ask you easy questions therefore. Okay, 2019. Done. The other parts, I'm guessing part number 3 and 4 should be macroeconomic equilibrium. That's why I have not included. Okay. Done with that. Moving on to the last paper for today, the 2020 paper. Okay. So again, whether it is included in GDP or whether it is not. State whether the following activities are included in the calculation of GDP. Okay. I'm also kind of sick of reading. Okay. Purchasing shares, not included. Not going to explain again. Construction of a new house, guys, that is investment included. Purchase of 50,000. Okay, this is an interesting one. Purchase of 50,000 worth of fish by a restaurant in Colombo. Do we include that or do we exclude that? Purchase of fish. What do you think? I can't remember if the exact. Just check with the answer scheme. But if I'm not mistaken, I think this is excluded. It's not included. Why it is not included? Because this fish would have already been recorded by the fisherman. No? As his production, he would have recorded. But for this restaurant, it's intermediate consumption, right? Now they are getting that fish, they will, let's say, make a dish of the fish and they will sell it. So for them, it's kind of intermediate consumption. So if you include this purchase of fish, right, you're kind of double counting, right? So you include the purchase of fish by the restaurant, plus if you include the output of the restaurant, you're doing a double counting error. So just check with the answer scheme as well. I'm not 100% sure, but I'm 95% sure, right? So purchase of 50,000 worth of fish, right? Because of intermediate consumption, you can not include it. Correct? Okay. Then part D. Okay, so answer scheme also says that, I guess. Okay. Collection of 5,000 worth of bee honey by a farmer from a nearby forest. Yes or no? Bee honey by a farmer from a national forest. Guys, this should be included, guys, right? Because this bee honey, to collect this bee honey, there is a production activity, he has to go there, he has to take it, and he is doing it. It's not just coming, bee honey is not just coming to his hand. No. There is some production activity taking place, right? The bee things must be now. For example, let's say if a person who is selling fish, these aquariums, right, that sell all these goldfish and all of that, now their output is also included in GDP. Now that does not mean now they are also, right, in that whatever thing, the fish is naturally growing, but it is growing because of some human intervention. They are the ones putting into tanks and doing that. Now here also, the honey will not just come to this guy. He is going and doing something and taking that honey from that hive. So there is some sort of a production taking place. So it should be included, right? And then part E, a research project costing 10 million completed by university research team on economic impact of COVID-19. Yes or no? That is included, guys, right? So any type of research, right? Now that is the productive activity. It's like a service that is being doing, right? You're doing a service kind of. So it is included. Okay, part C again. This one, the purchase of 50,000 worth of fish, I am saying is not included because this fish is intermediate consumption, right? Because now if you look at the restaurant, they will buy fish from a fisherman and they will, let's say, cook it or do something and they will make a dish out of it. Now, let's say they buy fish for 500 rupees and let's say they make a dish or something out of fish and let's say they make a cuttlefish thing, right? And they sell it for, let's say, 2,000. So then if you include the 2,000 of their output and the purchase of fish of 500 also, then they are doing double counting, no? Because this is intermediate consumption. That is why I'm not taking it into consideration. So someone told me that the answer scheme also says the same thing. Okay, so C, no. Okay, I'm repeating. A, no. B, yes, included. C, not included. D, included. E, included. Right? 5 marks there. Okay, and the last one, gross national income, GNI, and gross national savings. How do you go to that? You have been given the following data. Okay, so how do you go to gross national income? Consumption, GD, the domestic formation, export, import, net primary income, current transfers. Okay, so first of all, part A, how do you go to GDP? First one, guys, first one is not included, guys. Come on, I've talked about shares like 100 times. So purchasing shares, guys, are simply money transfers, right? Money going from one place to another place. So that is why it's not included, right? There is no productive activity taking place. So remember, shares not included. But if a dividend is coming from that share, that dividend is included. Okay. Okay. Oops, sorry. Okay. 2020. This one. Last question for today. Okay, gross national income. Oh God. Okay, wait. Something is telling me I shouldn't finish the class early. Maybe science, no? Okay, so how do we get gross national income, guys? If the company is creating a valuation, so see, company might be creating a valuation, but they are not saying that. No, they are simply saying person purchasing shares. Simply a purchase of shares is a financial transaction, purely financial money transfer. They're not saying that the company is building something or investing something. Yes, if they say company is investing something, yes. Okay. Okay, gross national income. How do you go to gross national income, guys? First, you have to go to gross domestic product. So GDP is equal to CIG plus net exports. So simple calculation. How do you get the numbers here? Can you all help me? Calculate GDP consumption, aggregate consumption expenditure 10,000, because aggregate means total. Don't get scared when they put different words. Gross domestic capital formation 4,000. G is not given, so there is no G in this question. So you can just say plus 0 if you want. Net exports, they have said exports of goods and services is 3,500. Imports of goods and services 4,500. So can you tell me what is the number that we get here as GDP? 1,300? It should be more. No? There is a 10,000 C. 10,000, 14 minus 1,000 is 13,000, right? Basic math is 13,000 now. Why is all of you are giving me different ones? Okay, so from GDP, how do you go to GNI now? So to go to GNI to GDP, you add net primary income. So GDP is 13. You can do it at once itself, right? But I'm just showing you this thing because they are asking you GNI now. Net primary income from rest of the world, they're saying is a minus 400. Nice. Just because it's a minus 400, I'm telling you once again, don't say minus net primary income. Your equation is wrong then. Okay, so net primary income 12,000. Guys, just check with the answer scheme also in case I'm giving you a wrong answer. I can make arithmetic errors. 12,600. Okay. Okay, part B, gross national savings. How do you do that now? That's a little bit of an interesting thing. What do you think we can do? It's actually a little confusing, guys. right? So first of all, right, what you do from GDP. Now they have not given you consumption of fixed anything. Now from GDP is Y, right? GDP is Y. So from GDP, if you minus the consumption, right, what do you get? You get domestic savings. Do you all know that? Domestic savings. If you minus the consumption, you get domestic savings. Oh, I plus NX. Remember, domestic savings is I plus NX. Do you all know that? You can do that also. Yeah, equation is correct. So domestic savings is equal to investment, that is your gross domestic capital formation plus your net exports. So can you all tell me how much is that? How much is domestic savings? Domestic savings, gross domestic capital formation, 4,000. Net exports is a minus 1,000, right? So you get domestic savings of 3,000. So from domestic savings, how do you go to national savings? You can forget this part if you want to. Okay, so this is domestic savings. So how do you go to national savings? National savings is domestic savings, right? Plus what? Is, remember, it's not just net primary income plus this and this, it's domestic savings is also there. Domestic savings plus net primary income plus net current transfers or net factor income from, okay? So domestic savings, you can put all together and find also, guys. You can simply say national savings equals GD, gross domestic capital formation plus net exports plus net primary income plus net current transfers. I'm just showing a breakdown, right? You can put it all together, no problem at all. Domestic savings 3,000, primary income is a minus 400, and the current transfers is 1,000. So how much do we get? Minus 400 is 2,600 plus 1,000 is 3,600. Yeah. So that is the answer. Are we okay? The calculation. Shape, yeah? No? Right? Finally over. Yeah. And also, guys, one small thing, right? Probably towards the start of April, right? Yeah, so since a lot of students ask me about the fast track and what I'm going to do and stuff, right? I thought of having kind of a seminar at the start of April, right? To help you plan the next few months ahead, right? So in that, maybe towards the end, I'll tell you a bit about the fast track. So you all join that, you can get information fast track. So now the fast track is also planned to kind of get you to your full potential to study for A levels, but I know not all of you all are part of it now. But I will give you some general tips on how you can plan your next 5 months, mainly for economics, not other subjects, right? Mainly for econ, right? How you can plan it and kind of what you should do each month, kind of thing. I'll give you all a plan, right? So then I'll also give you a bit of information about the fast track. No, fast track has not started. I'm planning to start on April 10th, if I'm not mistaken, if that is a Saturday, right? So that is that. Okay, so that is the things. If you all have any questions, guys, you all can stay and clarify. If not, thank you for coming. A levels is not in August. It's confirmed it's not in August. When is it? It's not confirmed, but for sure it's not in August. So don't worry, it will not happen in August. Okay. That's it for today. If you have questions, you can stay and verify. Yes, there was one question on why can't we do something. Can you please put that again? It went up after all the thank yous. Okay. Thank you for coming. I'll see you on next class.